Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein. And, what you watch me do daily is typically 3 videos a day, Monday through Friday, and then I do webinars, and on Wednesdays or Thursday, I hold a live chat room. I talk about the different technical tools, and one of my favorite is called the Bollinger Bands. Now, the Bollinger Bands were created not by me, but by John Bollinger. The bands are lines drawn around fixed intervals of a moving average. I, on my charts, don't necessarily draw the moving average since I use a key moving average anyways of typically the 18-day average of closes. But it's a large part of the formula is based on market volatility. You can go on if you wanted to, let's say, Investopedia and get the formulas and see what they are. The key is a Bollinger Band uses a standard deviation to determine where the charts are placed. Okay, 2 Bollinger Bands get plotted. Some people plot a third band, which is that moving average, but typically it's the upper band and it's the lower band. The upper band represents 2 standard deviations above the moving average, the lower band 2 standard deviations the other way. The rationale here is if you did it only 1 deviation away, you'd be about 65, 68%, and by having 2, you're at a 95%. So I want you to set your chart deviation, if you have the study, to the number 2 and work from there. Now let's take a look, if we can, at what this all looks like as I bring them on, because the Bollinger Bands are going to be what? One of your profit objectives, or another way you can look at it, a resistance objective and a support objective. It depends what you're looking to use it for. People do it differently. The first observation is the green lines represent, let's call it a bar chart. These whitish lines, both the top and bottom, what are they? Those are the Bollinger Bands. The first observation you should make is the bands are not parallel to each other. They can go from highs to lows in waves. And here's another thing they will do. It's not unusual for them to widen out and then narrow on back in. I use that widening out and narrowing back in the videos that I show you, because the more they narrow in, the more you're starting to talk about a potential move. This formula is meant to, in the Bollinger Band, encompass 95% of the move. You'll see here, you can get over the top of the band. You can get under. Only 2.5% to the upside or downside, statistically speaking. So what I look for is when a market challenges a band, it's a resistance point. If you're long, maybe that's an area that you take some profits at. That's going to be up to you. To the downside, you've got the same band, and what am I looking for? Looking when you hit the band for it to be a support zone, a profit objective point. Same thing right through here. When I put it all together, I do it, as you can see right here on our website, and this is the area we call education, and it tells you about the course that we have on this and how that course does work. And if you look at it, there's swing lines, moving averages, slow stochastics, window envelopes. We go through everything. There's even a video you click right there on our website, www.iraepstein.com. Hit the word education. You'll learn more about the course, way more detail. There's 37 videos, about 5 to 6 minutes long. You do what I do, then use the charting software we give. You do it, and I think you start putting your game plan together. With that, I'm Ira Epstein. Thanks for watching.